Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 15th. Retail sales month over month came way hotter than expected. We expected 1.8% and we got 3%. Retail sales year over year are now at 6.4% from the previous 5.9%. And excluding autos month over month, we were expecting 0.8. It was negative the previous one, but we got 2.3%. Also, New York Empire State Manufacturing Index also showing still negative, but showing way higher than expected. We expected minus 18 and we got minus 6% almost. Manufacturing production month over month, positive. Year over year, positive. So everything looks like is starting to again show signs of consumer spending. Retail sales breaking this trend shows that maybe despite of inflation, US consumers are spending way more than needed and way more than they are capable of. Also, we need to wait for tomorrow PPI to actually confirm this trend that production price index is going higher, and that would impact future inflations, because if there's still inflation on showing signs of inflation on the production side, on the producer side, there will be inflation once that price comes through the supply chain to the final consumer. So it will show on the CPI next month. So be careful with this kind of readings, because this news, despite showing strong consumer discretionary, strong consumer spending, it's not what Fed wants. We are trying to cool down the economy, cool down the spending by raising interest rates, and looks like US consumer just don't care. We started pre-market showing signs of more or less some kind of bullishness. Retail sales number dropped out, and we started chopping around, showing these weeks, and it's starting showing signs of support. And this was the open. Let's focus on the open. Moving up, rejecting blue settlement. This is settlement from yesterday. And remember this red area that we had since yesterday. Let's take a look at the 5-minute. This was yesterday's rejection and the point of control. Settlement on futures was up here, and we started to show signs of rejection again at these levels. First it was settlement, and then it was these big rejections that I think a lot of bulls got trapped in. So again, look at these markets. These markets are in range. These markets are not showing signs of progress. This is the 30-minute chart, and we are in this huge triangle, this huge wedge. Every day we do a lower high, lower high, lower high, rejections, and now this. And all these moves have been with strong fundamental against what Fed are trying to do. So be careful, because things are starting to look scary. There's something sketchy in here in the markets that don't allow markets to sell off. And I have something for you in that regard. Let's take a look to options. This week is, if we check these Fridays is third week's option expiration with a total open interest amount of 3.5 million of options. And look at this. There's 325,000 of puts at 375. But not only this huge wall, also 380, 390, 395, 400. There's not any call wall. The only one is 418, But this huge amount of puts are what is not letting the market sell off. Wall Street, remember, Wall Street writes all these options, and they, in their best interest, they don't want to pay anyone. So once a month during these weeks, they try to do some kind of sneaky manipulation, sneaky push and inducements in order for not to pay anyone. Max pain is 411. Let's check at which level we are on the S&Ps. 411. We are just there. We are holding, waiting for all these options to expire. Don't be naive, be smart of looking at these options during this time, third week's option expirations, because sometimes you catch this kind of indicators, some kind of data that shows you why we are not selling off. Wall Street, mutual funds, big banks, hedge funds are buying and supporting the markets not to pay any of these huge amount of puts. Now, hear me here. Once we finish this week, let's do next Friday, that's 24th. There's also big puts, but look at this. This is 40,000. We were talking about for this Friday around each of these peaks is hundreds of thousands, and this one is 325,000. So next week, be careful because markets may come down, reach these levels, and maybe stay in here, and Wall Street will be more than happy to pay these guys because there's no way, there's not even a lot of open interest. There's only 600,000. For this week, there's 3.5 million. So sometimes options are this clearly states that Wall Street is involved in this kind of weird price action. CPI went higher, retail sales went higher, and somehow we are not selling off. We are continuing. We are going to continue raising rates. There's no doubt, but somehow markets are still holding. So think twice about what is happening because looks like not only SPI is influenced by a lot of options manipulation, but also Tesla. Tesla, it's been moving like a lot. Yesterday, 6.51. And there's also a lot of manipulation and speculation on Tesla's option this week. So be careful, check these things because sometimes, and this is one of those times, in third week's option expirations, sometimes it's just the reason why we see these kind of things that makes no sense based on the fundamentals. Dollar. This is one of the things that I already told you. Look at this. Accumulation. Look at these weeks. Week, and strong week yesterday. Look at this. And now the move. Dollar, it's 0.77% today. And we are moving towards 105. There's no doubt. I think there's no doubt that the big DXY dollar index is going full throttle at least to 105. That is going to affect the markets, but now that earnings are closed, mostly, we are able to invest in these kind of things. And I think dollar is seeing a lot of momentum, a lot of buying due to that. Yields, Again, the 2-year yield 0.28 today, the 10-year 1.70. Check yesterday's video. I will say it again. These two yields are related, what is called the inverted yield curve. This is the one. Yesterday we crossed this support. We are now bouncing, but I don't think this thing not breaking down. I can see this trend continuing. Look at this. This trend is since more than 2 years ago. So don't be naive. Be smart and check bonds market. Yields are telling another story. Let's take a look to September interest rate futures. They are pricing in 5.24. Again, as I mentioned yesterday, this pivot is super important. This is for September this year, and we are starting to see this type of push higher because CPI, retail sales, a lot of things, a lot of fundamental data, it's showing that we need more hikes. And this pivot, this kind of thing shows the real story, not the markets holding with any kind of sense. It makes no sense. Now that you know that options are one of the reasons, now you will understand why yesterday I said that follow bonds market, follow this kind of move. This is the reason why we have to be very, very cautious. December, markets are not pricing in anymore an interest rate cut. Another big announcement from the bonds market that no one is paying attention to, looks like, at least the media. Media is just spreading some nonsense and saying that we are okay, retail sales are really great, CPI is not that bad. Bonds market are taking that stake and risking on higher interest rates. And you know what? Nasdaq tech stocks hate interest rates. Gold hates interest rates. Look at gold. This is gold. This is clear rejection, bear flag, huge bear flag, and continuing to sell off. Gold is already pricing in these kind of things. And if we draw a trend line, you can clearly see that we were holding this and we are already breaking down. This was a very nice distribution and continuing moving down. And gold is minus 1.20. So I have enough correlations in my analysis that I'm showing to you to justify taking not big risks and just be patient. These markets are preparing something big. These markets are playing games and you have to understand what are the rules of these games. And I'm trying to explain to you that check options, check the dollar, and check yields. You will understand why sometimes markets do what they do, and I don't trust this market. This wedge is super interesting, but we are not progressing to the upside. Most likely, I will just take some opportunities to the short side once we break this structure. Bonds market are justifying me this kind of option, this kind of position, and also options. Once this week finishes, I think markets will react according to what kind of economic data we had during all these days. And that's all from my side. I just wanted you all to know that please check other markets, check correlations, look at sector funds. XLK, it's in the red. XLE energy, by the way, it's having a very hard time. Crude oil is not able to continue higher, but crude oil is super manipulating and is based on geopolitical reasons. So overall, energy is pulling back a lot. Natural gas also, if you are not aware of this natural gas trade, this is called the widow maker for a reason. So overall, XLE and some risk on assets on these sector funds are more or less in the red, but I am waiting for defensive sectors to start going green. XLU, XLP, and XLV, I would like for them to start showing me that big money, big players are starting to go defensive once we allow the markets to really sell off after options expiration this week. And that would be the combination of all your analysis, of your correlations, and all your studies in order for you to take big opportunities. And that's why I'm here and what I'm here for. And that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications each time I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time. Remember that the trading day is not over yet. Be careful with these high levels at above 12,650 and wait for that opportunity. We are chopping around and we are, I think, in the background manipulated by the big money players due to these third week option expirations. So be patient. I would like to be patient for next week to start shorting the hell out of this market. Discipline and risk management are key for success. Stay safe, everyone.